Hey everybody, good morning. Welcome to Ready Set Trade. Today is the Monday, the 27th of March, and we're starting another week, and we have the futures up today in the face of extreme negativity. Are we climbing the wall of worry? Maybe. Let's take a look. Let's see what's going on this week. We got a lot going on as we close in on the next earnings season. Not much is going on today, so actually we're going to have free reign in terms of the zero DTE trade. So if we can see an early range setting up, we will go for it early before 10 o'clock Eastern time. Not much in the way of Fed speak that I can tell. We have, let's see, for today, we have an expected move setting up today of, let's see, what do we got? about 28.6 points. So that's not bad. That shows that the market's not necessarily holding its breath waiting for something today. So we may get a free day to trade. Now, as we look through this week, we have a number of Fed speak opportunities, and I'm not sure who Michael Barr is and why he's speaking back-to-back on Tuesday and Wednesday. I think he's testifying in front of some committee somewhere. GDP on Thursday is a non-starter. That is a third revision. We'll get the first quarter GDP coming up next month in April. Some of this, probably the biggest risk of the week is the PCE report on Friday. All right, so we got days before that, plenty of opportunity for the market to sense risk and or maybe even break out of this range. All right, not much in the way of earnings. Really nothing going on here, nothing of note. Next week is going to be super lame. We have the Friday coming next week, next Friday. Not this coming Friday, but next Friday is a market holiday for Good Friday. And then we have 2 weeks from this Friday is JP Morgan earnings. Okay, so not much in the way of risk coming in through earnings. Fed Funds Futures is showing a majority chance of no hike coming up on the 3rd of May and no hike coming up in 14th of June. Nothing. 75 basis points rate cut by the end of the year. So bond markets and Fed Funds Futures markets are pricing in some form of negativity, even more so than we've seen in the last 15 months. All right, this week we'll be here normally Monday through Friday. And again, Good Friday will be 7th of April session, so the next week will be a 4-day session. Okay, let's see what's going on today. Let's bring down the charts and see what we got. Who we got out there? We got Juan and Scott so far. We got some other folks hanging out. Say hi if you get a chance. All right, so let's look at last Friday. Now, we started off the day range bound. And you might think that that's good because, range bound is what we look for with the iron fly. But we did not get really much of a chance. As we broke up the session right after 10 o'clock, the price was kind of consolidating, looking like it wanted to break higher. And it did actually break higher, but that was a false breakout. So we did actually get some pretty good chop for a Friday, but so much volatility. We're just not getting any kind of stable range that gives any kind of confidence to stay in a position. But we'll give it a shot. We'll keep looking for these. And if we get a shot today, we will take it. Again, like I said, if we can identify a range early, we'll enter early today. So that was Friday. All right, let's look at the charts. What do we have here? I'm showing the single price VWAP chart. And interesting that we're in this pinch right now. Okay, so pinch starting from the October lows. We also have beginning of the year. So that is support and resistance. And we also have a declining VWAP since the important high back in February. So that's also causing a pitch. Now, the price is starting to break out above that. We've tried that a couple of times last week, it's been unable to get anywhere. Unable to get anywhere. Okay, 4 minutes to go before the opening bell. 4 minutes to go. Now, what I had talked about this weekend doing was on the IWM. The IWM, or Russell 2000, is just in terrible shape, and it's just been destroyed lately. Strong reversal candle, not a key reversal bar, but a beginning of a reversal bar on Friday. And I want to see if we can take this thing back up to maybe this cluster of resistance here. So if we can get this thing to come back up to maybe somewhere between 180 to 183, we might be able to get some nice profits from something like that. So again, we're going to be looking at that. If we look at the, let's see, what do we got? 3 minutes to go, IWM. And we want to go out maybe to 28 April. And we want to do something. I had talked about, let's see, IWM call spread. Where did I say over the weekend that we were going to place that? Give me a second to find that. $183, $185. So I may bring it up just a little bit below there. I mean, we don't have to find it perfectly, but somewhere around that area. And something where I can set up a nice trade. We got 2 minutes to go. So 183, 185. We could probably still do that. But we'll see what we can get. I want to see if we can get like a too wide spread for maybe 50 cents or so. Too wide spread, 50 cents. So risking 1 to make 4. And I just looking for an opportunity to make 100%. We got Justin joining us. Good morning, Justin. Thanks for stopping by. Okay, so we'll do that once we get things set up. We'll let the market settle down just for a couple of minutes and let the volatility come in, and then we'll look to put that trade on. Again, I want to set that for about 100%. So a couple of things that we're going to be looking to do. I'll show you guys how to set up the iron fly. And you can see the price on Friday, we got about 1 minute to go. Here's the upper expected move. Here's the lower expected move. And the price got right up to that upper expected move on Friday and then actually closed at the highs of the day right above there. So we had a skirt into the weekend. That's a strong indication. And what I like about it is the fact that everybody is so blasted negative right now. Now I'm going to edit this study and set it for today. So I'm going to anchor this VWAP off of today. We have 30 seconds to go. So 2023, 03, 27, which is today, 9:30 in the morning. We're going to set that up. As soon as we start to print candles, we'll start off with that VWAP. Okay, so what we want to do right off the bat is we're going to go to the SPX. I have to hurry here. And we're going to go to today's options, 27 March. And the first thing I want to do is grab this expected move for today. And that's going to be 28.4. Well, let's call it 28.47. Yay. I like that sound. 28.47 is going to be our opening expected move. So what I'm going to do is enter that down here. So 28.47. is our opening move, and then we need to grab the opening print for the ES. Okay, what is that? Okay, cool. All kinds of stuff closing. All right, gap chart. Here we go to the gap chart. Now we're opening up a little bit of a gap today. You can see that gap there. And I want to draw this in here now because gaps over the last couple of months have been really something that we don't see lasting for very long, maybe a day or so. And that gap is closed. So there is today's gap for now, and that becomes a target. All right, the opening print for today is 40.26. 40.26. So I'm going to put this into our spreadsheet. And we have an upper and a lower expected move. There we go. Upper and lower expected move. Now let's go translate those over to our intraday chart. Okay, you can see Friday's upper and lower expected move, which are way down below. So I'm going to start moving these up. So I'm going to move that upper expected move to 40.54.47, 40.54.47. And I'm going to bring up the lower expected move. And that's going to get moved up to 39.97.53. 39.97.53. Okay, so there we go. There is today's battleground. So what you can see from this is really about all we need to be able to trade markets intraday. We have the lower expected move. We have the upper expected move. This is what is being priced into the option chain. That means that there's a 68.2% probability that the price will stay within or end up closing. It can certainly go outside either way, but it'll end up closing inside of this range. Here is the gap that we have from, this goes to Friday's close. So Friday's close was there. And so there's our gap for today. You can see all of these green numbers, right? So we have some good strength to open the market today. And this line, this red box in here is called the opening range. That will print for the first 30 minutes. And then we'll extend that out into the rest of the day. The market will track this opening range. Is the anchored VWAP a custom script? Yes, it is. Okay, so let's do this. Now, we're going to give this about another minute or so, and then we'll look to place the IWM trade. I'm going to go over to the analyzer and just set it up in the analyzer for right now. So we talked about maybe like a 180, 180. Let's see, what was that? 183, 185. Okay, let's see how much this one is. We're going to analyze buying a vertical. Oh, it looks like I've already done that. Okay, so if we look at this right now, it's about 47 cents. So it's actually gone up a few cents overnight. So here's the potential risk on the trade. And then here's the reward for the trade. So for us to get 100%, we're going to need the price to come up to maybe around 180 or so. And that seems reasonable. That seems reasonable. So this is what I'm going to do, guys. I'm not sure if I'll get in for 47 cents, but this is what I'm going to try to trade here today. So I'm going to go over to my trade tab and set this up for IWM. And then just copy this into here. And it looks like midpoint is like 48 cents now. I'm going to start at midpoint. Wow, this thing is moving. I'm going to start out at midpoint, and I'm going to go up to 50 cents if I have to. Let's go ahead and cancel this. It looks like it's already above that. Let's try 49 cents. And there we go. We are filled at 49. So I'm going to post this into the room. Okay, so let's bring this into the room and we'll targeting 100%. Okay, so we're going to post this out to everybody else. And if you have your notifications set up right, so you might want to go over to the personal settings in your account. You can look at notifications and you can see like there's a mobile push. So if you've got this on your smartphone or anything like that, you can see the mobile push. And you can see as activity happens or daily digest. Obviously, you don't want a daily digest if you want to look for trade updates, right? So as activity happens, you want to make sure that that's set. And then just, go through here and check off the ones that you want to get posts from and the ones that you want to avoid. You can sort of tailor the information that you're looking for. Okay, so there we go. And what I'm going to do is go ahead and I'm going to group this thing. Move it to a group. And then let's set up our limit order on this. We got in at 49 cents. And so what I want to do is to look to get out of this at IWM call spread. So we're just going to highlight this and set the closing order for 98 cents. Limit, good till cancel. There we go. Okay, let's see what's going on today. We're working into that gap just a little bit. Working into the gap. Now let's go focus on doing an iron fly. So we started off with a 28-point wide expected move, plus or minus 28 points. Let's get rid of Friday's garbage. Okay, so we're going to go over to add simulated trades for today, 27 March. And I'm going to go slightly out of the money here. 4,000 is where I want to set this up. I'm going to analyze selling an iron condor. And I'm going to set both of these short strikes for 4,000. Again, if I'm going a little too fast for some folks, you can always rewind the video and watch in slow motion or do whatever you want to. And I'm going to make this 30 points wide because the current expected move is 28. So if we put the wings 30 points out, that'll encompass the width of the expected move. So this is going to be 40, 30. And then the long put option is going to be 39.70. And that makes us 30 wide. Gives us a credit of almost $20. There's the risk profile. Let's set the price slices for what they should be. So there's the current price right there. And this looks pretty good. I like this. So we're going to see, so far what I'm seeing is a little bit of time decay. I'm going to reset this quickly here. Wow, this is all over the map today. A little bit of time decay. Let's see if it's behaving itself. We're still working on the gap. You can see the gap is still being worked on. The opening range right now is about 13 points, so it's not bad. I would like to see it a little bit bigger than that. Now, the other opportunity that we have today is if the price is going to come back down here and fill this gap and maybe even test the lower expected move and the lows of the overnight session from the European Open down there, that would be a good move for a mean reversion move. Mean reversion back up into the middle. And we can play that with a broken wing butterfly. Now, the strike prices that you see from this, if I go over here and start to build one of those, This assumes that the price would be at the entry point. So the price would be rejecting off the lower expected move and then starting to head higher and seeing a good move on the internals as well too. So we're going to go over to add simulated trades. We would use the puts in this case. We're going to look for the option closest to 35 delta, which is about this 39.85, and we're going to buy a butterfly. Now, if we just add this butterfly to the risk profile, that's a stupid trade, right? It makes no sense to put that on. So it's only 30-cent debit, which is cheap, but there's really not any chance that you're going to get that thing to not only get in the butterfly, but also what you have to understand is that you don't get this P&L diagram from the butterfly until the very last few minutes of the day. So it's a trade where you're going to have to stay in there for 6.5 hours and hope that the price somehow wanders into that butterfly. Okay. Not really a high probability trade. What we're going to do is we're going to change it slightly, and we're going to break the wing. We're going to break this wing 5 points further out of the money, and it's going to create this looking broken wing butterfly. Now, what's good about this trade is if the price heads higher, then it's got a positive delta to it. If it heads higher, it's going to be profitable to our target, maybe after another 10 or 15 points of just raw movement, or just some time decay as well, too, is going to help us. So this is a positive time decay position. Now, if the price goes lower, we actually have this area here where we can sort of deal with that. So that's that kind of delta P where we can handle negative price excursion. And that's good for maybe 20 points. We got 20 points of room to be wrong, and we can still make a profit. Now, the problem here is that we're going to have to wait for probably until sometime later in the afternoon. So we're probably going to have to be waiting until like 2:30 to 3 o'clock to get a profit on something like this. Maybe a little bit less if it's closer to this end of it. Now, if the price goes really far down here, this is where we're going to, either we're going to use this whole thing as R, which is what I've been doing lately, or you're going to have some kind of price level where you say, hey, look, I was just wrong. I'm just going to get out of this thing. I'm going to take my $100 and boogie. Okay, so it looks to be there's some folks trying to add the anchored VWAP. Let's take a look at that. Now, let me do a couple of things here. First of all, what I'm going to do is I'm going to go over to Studies, and I'm going to edit Studies, and I'm going to just look at the VWAP. Here's the VWAP study. This is not the anchored one. This is the embedded study in Thinkorswim. And if I do a right click on this, I'm going to view. Now I can't edit this thing because this is an embedded function. Okay, so that's what that looks like. So let's cancel that. Now what I'm going to do is I'm going to show the anchored VWAP and show what the difference is here. Now the edit is that they've got a start time. So here's a defined start time, and here's a defined end time. And so here's an anchor date. I'm going to have to input the anchor date to these. So if I look at this on the anchored VWAP chart, for every one of these, if I look at editing this one here, if I edit this study, I'm going to have to put in the anchor date. Now, the anchor time is always going to be 9:30 for these. The anchor time is always going to be 9:30. But that's how to edit these things. So if you're looking for a share, I'll just do this one here. There's a share for you guys. You're just looking for one today. Okay, nice little bounce today, and I wonder if the IWM trade's still about break even right now. We have a long iron condor, which has got about a month to go. And we have very few positions right now. We have a long covered call in the QLD. And that one is, let's see. Oh, I've got that in a different account. But I think we did, what, 55. I think we have a 55 covered call on that. Okay, so let's look at our, so that's a possibility, is the broken wing butterfly. So we're going to look at this iron condor here. And now the opening range is getting to be more better, right? It's better now. It's about 15 points, which is, we're getting closer to about 1/3 of the entire expected move range, which is kind of what I'm looking for. It gives me more room to operate within. Hey, Koob, let me know if you have troubles with that share. The problem with the share is, unless you enter it like right now, I don't think these things even work the next day. So I can't, in any of my documents, I can't use share codes because they don't live more than maybe a day or so. Okay, good. So I'm going to put a section into our platform showing how to use the anchored VWAP and how to apply it to your charts. So we've also got, let's see. Also got this on TradingView. So TradingView has got essentially the same thing. If we look here on the spiders, and if you want to, what you can do is you can, like on TradingView, you can copy this. Right, so I can copy and then I can paste in another one. And so for this one, I can say, all right, I want 2nd of February. So inputs is 2nd of February. And we want to use that as 9:30 in the morning. Like so. There we go. So there's a yellow one coming in from 2nd of February, and we can change the settings on this to give a different color. Like so. So there's all kinds of these out there. I also have one on Trend Spider as well too. But this thing has been around for quite some time, and I think it makes a nice complement to the fractals. Okay, so we got about 10 minutes to go. For our opening range to set up. Right now, I would say it's fairly range bound, but I don't have a signal to get into the iron fly right now. I don't have a signal to get into the iron fly. The one on TradingView I created or pulled from somewhere. Let me see. I pulled from somewhere. You know, if you just go into indicators and if you start searching on, You've got anchored VWAP, anchored VWAP. I mean, there's just tons of them. This might have been the one that I used. There's one like anchored VWAP click, where you can just basically click and pick where you want to put it on. And what you can do is kind of, compare them and make sure you're getting the right numbers. Yeah, I am not a programmer. I did programming in school, and I was at the time not very organized. I would just sort of like dive into stuff. It was just keep throwing stuff against the wall until you get all the subroutines to run. But yeah, I can't imagine doing that for a living. I'm just not, don't have the patience for it right now. Okay, back to the charts. Yeah, guys, let me know if you get stuck on anything like that. Right now, good, pretty strong market. Let's see what's moving here. We have all sectors up today and being led by, go figure, the financials. So this is potentially, after the Friday working session, this is a chance for the market to say, okay, we think we have it. Now, tomorrow could be completely opposite. That's been a problem the last 2 weeks. It's like one day up, one day down, one day up, one day down. And not just up, but also way up or way down. So it's been a very difficult market to get in line with. All right, that's our sector spiders. If we look at the Dow, let's see what's moving on the Dow. Most are up on the Dow. We're 28 and 2. American Express is up. Boeing is up. Goldman Sachs, IBM, JP Morgan. So a lot of these big banks are doing very, very well. Looking at the NASDAQ has been surprisingly relatively strong as of late. And the NASDAQ has no problems today. Baidu down. Google is down, surprisingly. JD down. So some of the Chinese stocks are having problems today. Tesla's way up, over 3%. Apple's kind of sucking wind right now, but still is up. Okay, fairly strong. And then we have the Russell is up quite nicely as well, too. You're going to see slightly different numbers on the SPY versus the ES, and that's because the ES does move around. And the SPY has a dividend as well, too, so it moves around as well. Unfortunately, we cannot use the SPX with this because there is no volume. There is no volume to this. Okay. Now we're talking. Now this would be good here if we can get the price to stabilize in this area. Then we're just about at the right spot. Now, have we seen time decay? Yeah, there's a little bit of it, not a whole tremendous amount. Remember, we're only dealing with a 28-point expected move today, so. Now, if we were to enter here at 39.96, let's just say, $39.96, then the stops would be for this $39.68, and this is how I like to do them. $39.68. So there's the lower stop for this, and the upper stop is going to be $40.24. There's the upper stop. So this is kind of how we do this. Some people use stops like right at the break-even line of the blue line here. And what we found is a couple of years ago when we first started, man, this is almost 3 years ago when we were doing these things. We found those to be a little too restrictive. So we extended our stops out to be about 1 standard deviation plus and minus from the entry point. And that seems to have worked out well. Okay, we got about 3 minutes left, and right now I'm optimistic that we might be able to get something in here. Now today, I think I'm going to play these by the stops. So normally if I see the price starting to run outside of the opening range, I'm usually out. But today I'm gonna play these by the stops. Seems to be, now that's a real strong opening advancer minus decliner. A little too strong, and we're going to start to see this coming down a little bit. So centering this around 4,000 still seems to be the right strike price. So as long as it stays at this point or above, this is the right strike price to center this at. So if we'll see if this stabilizes here, then we'll go for it. Otherwise, the gap is still in play today. Gap is definitely still in play today and could be coming down for a gap fill here. So we'll know this if we see the market internals continuing to sell off like this then, and spilling off negative ticks and things like that, then the gap is in play. And what might be in play in a few minutes, maybe in half an hour or so, would be a retest of this lower expected move. You could place an entry based on just the gap fill. If it takes off from there, it's not as good of an entry as it would be from a full expected move. You don't get as much of the rubber band effect if you just do the gap fill. All right, we got just over a minute left to go, and we're kind of right on the bubble here. Kind of right on the bubble. We're starting to see some weakness coming into here. We're close to the middle of the opening range. It does seem to be range bound so far today. Market internals are holding up. So again, this is the trade I'm looking at right now. These are the strikes. All right, I'm going to see if I can get into this. Okay, so there we go. Trying for 50 bucks here, guys. So I'm going to post this into the room. So I like to group these things so I can keep track of this. I'm going to move this to a group. I've already got a group called 0DTE. So I'm in at 1925. I want to get out at 1875. Okay, and again, the entry on this was about, let's call that $39.95. So my stops are going to be at $39.67 and $40.23. Okay. So there we go. That's exactly where we want it. And it should start to spill off some time decay here pretty soon. Pretty soon. So it's right around break even right now. Bumping all over the place. All right, guys. I will post when I get out of this, one way or the other, I will send out an update, and this will be in the platform. So thanks very much, and I'll see you guys tomorrow morning. Watch out for that broken wing butterfly entry to the downside. That may be a good entry if the price decides to go fill the gap. All right. Thanks, everybody. You guys have a great day. Thanks for joining me here today at Ready, Set, Trade. Cheers.